Hello everyone. In this video, I'm going to take the concept of ranges one step further into advanced. By now, almost everybody who follows my system should already understand how ranges are created. However, not all ranges are created equal. In this lecture, I will explain the different types of ranges. There are three types of ranges, and they are defined by their sizes. So let me write here. Types of ranges. Number one, small sized range. Number second, mid sized range. And number third is large sized range. So basically, how we mark the range. For example, if a range starting from here and it goes somewhere here, and after QM the high is confirmed. How we call this one? This is the large range. Why? Because it has the multiple legs inside. And mid-size, of course, will have one or two legs. And the small sized, just QM to QM, there is nothing in the middle, something. Why they are important to understand these types of ranges? It is because when we have the large size range, how we need, by the way, this is RANGE. So if we have the large sized range, how we need to treat this range? And if we have the small sized range, how we need to treat? I will give you the different examples on the chart as well. But first you have to understand, whenever you have a range, you first need to check. This is your first check on your check marks, that what type of range it is. Is it small, mid or large sized range? Once you are done this thing, then the other steps will come into play. Once a range is created, so what's the next step? So let's say your range is created something like this after taking the QM. So you want to play a continuation of the DOB, or you want to play the counter trend when the DOB was disrespected until, let's say, until EOB, until extreme order block, something like this. So this is the first step after create the ranges. You need to understand that there are only two types of play. Number one, it's continuation of DOB, or counter trend when DOB disrespects. Okay, so this is the second step. The first step, you need to identify what type of range it is. And the second step, once the range is completed, you need to check that I am going to play this as a continuation or as a counter trend. Now, this is the challenge to play into this area, and it comes with your experience that how you will play this area for the continuation or for the counter trend. So this is where you have to take some guideline from the moving averages. Let's go to the moving averages, and I explained that a little bit about moving averages, and then I explained that based on those moving averages, how we will play this area, how we will play the continuation, or how we will play the disrespects of DOB. Okay, the moving averages are our guideline, but everything, the first starts with the ranges and then continuation or counter trend. Okay, so let's go to the moving averages. I use 4 types of moving averages. Okay, 4 moving averages. Number 1, I use the 8 EMA, and 8 EMA is this one, the cyan color. And number 2, I use the 21 EMA, the red one. And then I use the pink one or magenta color, it's the 50 SMA, this one. And then 200 SMA. This one is the longer term moving average, and this is the light red color or light orange, whatever. So these 4 moving averages we will use, and these moving averages are our guideline to check that we want to play the continuation or counter trend. So you have to understand one thing, and these are the guidelines about the moving averages, and these guidelines will never change. You talk today or you talk with me after 20 years, this guideline will never change. Why? Because I'm using this guideline since 2006. So imagine that I never changed these rules until today, and I'm making money with these rules, and I'm going to tell you these rules which you need to follow from today until next 20 years or forever, whatever. These rules will never change. You have the 2 types of trends: short-term trend and long-term trend. Short-term trend, let's say short-term bullish trend. So what is a short-term bullish trend? If 21 EMA is greater than 50 SMA, and this is a short term bullish, 21 EMA is greater than 50 SMA and 50 SMA is less than 200 SMA. And by the way, I have the indicator for this one, and that is free. I can share with you later. So in the start, you can use the indicator, but later, maybe after practicing 2-3 days, you will automatically understand this is not a very difficult thing. So what is the 21 EMA? Look here. This is the 21 EMA. Once the 21 EMA cross above the 50, this is the 50, crosses above the 50, you entered into the short-term bullish. But the second condition is 50 is less than 200. So it means longer term you are still bearish, but shorter term you are bullish. Okay, short-term bullish. So it means that 250. So 50 is less than 200. You are longer term bearish, but shorter term bullish, you started from here. Okay, and what is the opposite? The opposite is short term bearish trend. Just flip this one. 21 is less than 50, right? And 50 is greater than 200. What does it mean? It means you are longer term bullish but shorter term bearish, and we are expecting that a continuation. Okay, so I'm talking about this leg here, shorter term bearish. So let's see on the chart this one also. Look here. Look this one. Let me clean up something. Okay. So 21 is less than 50. Let me clean up this one also. So can you see that this 21 crossed below the 50? So that's why we are shorter term bearish. But second condition is 50 is greater than 200. This is 50 is greater than 200. Means 50 is above the 200. Okay. So this is all pullback. This whole area is pullback. When this pullback is over, let me clean again. When this pullback will over, so actually we are longer term bearish, shorter term, longer term bullish, shorter term bearish, and once the 21 is above the 50 again into this area, now we are expecting that the price will go to take the new high. Okay, and from here we turned into the longer term bullish, but I didn't talk about the longer term bullish yet. I am just talking about the shorter term bullish and shorter term bearish. But the point is, into this whole area we are shorter term bearish based on this condition. You see that the 21 is below the 50 during this whole period. See that 21. Okay, let me remove the 8 first. What's wrong? Okay, let me remove the 8 for a while. So we were here. Look here, 21 is below the 50. So this whole period is a shorter term bearish. Look here, this leg, how many people they trapped into this leg and go long. But think about it, we are still in the downtrend. So this leg is basically not a buy yet. And then it came down, and a lot of people, they say, oh, the market didn't make the new low, so now maybe this is going higher. But then it fall again. Why? Because the 21 is still below the 50. Once the 21 is above the 50, then we turn into the longer term bullish. But of course everything are connected with the ranges. Later we talk about how to connect these moving averages with the ranges. I'm just explaining the moving averages, how we will use these moving averages to confirm our entries. That is very important, very important. And if these things are not important, I will not be using for the last 17-18 years. Okay, so I told you two types of trend, and now we are going to check the remaining two, and those are much easier. Why? Because everything is longer term. Let's say that is the short term bullish, and now we are going to talk about the long term bullish. So long term bullish simply means that 21 is greater than 50 and 50 is greater than 200. It means they are all stacked, something like this, something like this. 21 is above the 50 and 50 is above the 200. Everything is stacked positive. So that's the long-term bullish. And conversely, long-term bearish, they are opposite. 21 is less than 50 and 50 is less than 200. They are very clear and they are stacked negative. So let's say this is the 21. So 21 is less than 50 and this 50 is less than 200. So you see that just flip, nothing more. Now we check these two examples as well. Let me clean up. Look here. Look here. 21 is above the 50 and 50 is above the 200. We are longer term bullish now. Okay? And every pullback we are looking for buy rather than sell. Why would someone on the earth trying to sell this when everything is longer term bullish? 21 is above the 50, 50 is above the 200. Why would you think that, okay, this is the change of character, or let's say something like this, and you say, okay, now I'm going to sell into this zone. You see that someone tried to sell. Just imagine that this is the result when they don't understand the system, how system it works, and how many people they are trying to sell the longer term bullish. Let me clean up this. Look here. Someone is trying to sell here, and that's why you see that this is a sell reaction, and then just a face ripping rally. Why? Because 21 is greater than 50, 50 is greater than 200. Why on the earth is trying to sell this? I don't understand. So that's why you need to understand that if you are a longer term bullish, there is no sell, and if you are a longer term bearish, there is no buy, unless you do some counter trends and I say, okay, I milk out something. We are not here to milk out something. We want a good system that works over the long run. Even after 20 years it's working. If you are trying to milking out every small and very small or tiny moves, you will get exhausted, because you can't compete the millions dollars algorithm. It's impossible, completely impossible. You have to understand, if you really want to make the trading as your career, first thing you have to understand and make your rules. Once you have created your rules, then follow those rules like your religion. And if you will follow your religion, trust me, sooner or later you will start to understand them, how the things are working out. Then you will come out of this mindset that, okay, I milk out something. No, we are not here to milk out something. We are not algorithm. Okay, we are human. We need to create the system, and we need to follow that system. That's it. So in this system is telling me we are longer term bullish. So why on the earth I will sell this? I'm a buyer. In fact, I'm a buyer. Okay, so conversely I am seller if I'm a longer term bearish. But of course not every longer term bullish and longer term bearish is a buy or a sell, unless you define some rules, which areas are best they are working, and of course I will guide you which areas they work the best. Okay, so now you understand these 4 rules. Write them down or take the screenshot of this one, and then we go to check the ranges. And once the ranges we are at, like I said, once the range is completed, there are only 2 types of plays. Number 1, that is the continuation, or number 2, it's the reversal. Reversal means maybe the counter trend, because we are still inside the range. So you take the screenshot, and now we will follow these rules according to whatever I explained, and we apply them into the ranges. Okay, now I'm going to delete this everything, and let's start from the daily time frame, or we go to the 15-minute. I think I start with the 15-minute time frame on the smaller scale, so you can understand the things, but you can apply it on any time frame, and of course I will help you how to apply them. Let me check the most current ranges. Okay, see this range, there is nothing during this whole period. Why? Because the range is too big. This is what I call, when the range is too big, you have to understand that if the range is really too big, how you can how you can play these ranges like this. If you see on the daily time frame, basically this move started from here and then here and then here. Let's start, we mark the internal structure starting from here and check that can we play this leg. I don't want to take you too much far away, just we are here at the most recent price action. Okay, and in the most recent price action, at least you will get an idea that how we will play next into the next week. So we check and we mark from here. Okay, we go to the 15-minute time frame. Okay, let's say I just map the structure from here. Okay, now we have the ranges, right, automatically, and you don't need to think too much that you don't have this indicator and you cannot draw. It's too simple. You just go to the daily time frame, you check the most recent leg. Okay, from the most recent leg you go to the 15-minute time frame, and it is starting from here, and then you forget that anything on the left, just start from here. So this is the low. Now find the next QM, and then the price takes the breakup structure, then the next QM, then just go higher according from here to here, then low, then high, then okay, this is the change of character, but then we got another change of character. So it's actually continuation, everything. So you start from here, and every QM it will mark a range and then continuation. Okay, but of course I'm not going to explain how to mark the ranges. We have a lot of videos on this, how to mark the ranges. I'm just going to explain how to enter into these ranges when they are completed, and those two steps, continuation or the reversal, and based on the moving averages. So we go to the maybe the most recent price action and see what's going on there. Okay, this is the most recent range from here to here. Okay, there is no if and but that it is a range or not. It is 100% it is the range. Okay, why? Because after this QM the range is completed. Okay, the range is completed. Now we are here on this candle, and now continuation or reversal, we need to check here. Okay, and this is where we will go to the moving averages, and what the moving averages are telling us. What the moving averages are telling us, we are in longer term bullish. Why? Because 21 is greater than the 50 and 50 is greater than the 200. Okay, into this area, and once you have this candle here, the indicator will tell you automatically that you are longer term bullish. It will be written here LT bullish. Okay, I will give you the indicator. A lot of people they already have maybe, and otherwise I will give those who don't have. But like based on the rules which I said, you take the screenshot. So you check based on that screenshot. You will check that 21 is greater than 50, 50 is greater than 200. It's longer term bullish. Okay, so if something is longer term bullish, would you like to sell? Number one is continuation, number second is a reversal. So would you like a reversal entry into here? No, actually you are looking for what? You are looking for long. Why? Because we have the longer term bullish. So from here, if you buy, this is your first target. Okay, but of course I will buy based on the confirmation entry, and if it will provide me the confirmation entry, then I will buy. If I will not get the confirmation entry, even I see everything is confirmed bullish, I will still not buy. Why? Because you have to understand one thing. When you buy something, you have to understand that have the sellers coming into demand have diminished or not. This is the most important point. You have to understand this. When you are buying, look here, once the range is completed, these are the sellers. They are coming into demand area, right? So this decisional order block, you are looking for buy. The first question you need to ask, have these sellers, they diminished or they dried out? The question, if the answer is no, then why on the earth you are looking for buy when there are the sellers, they are present in the market? Okay, you need to first diminish this move. And how we will diminish, I explain you here everything. For this thing, you will go to the one time frame lower into this leg. And let me go first, and if I will explain everything here, I think it will be confusing. First I go one time frame lower. Okay, I'm here on the 15-minute time frame. Let's say this is a 3-minute time frame. We have the moving averages. Can you see that this is what I'm explaining? See the sellers. Can you see the sellers? Why would you buy here when you have the sellers like this? Don't try to compete the algorithm when they are selling and selling and selling and you are trying to buy. How on the earth you can even think about it to go against the algorithm? You have to first understand that they are the sellers. So how they will diminish? Look, the market makes a lower low. Then we have a 3 candle formation, market makes a lower low. And then market makes another lower low. And how about this one? Look at this leg. Market make another lower low? No. This is the first time you can say that the market failed to make a new lower low. So it doesn't mean that it is failed means now you are okay to buy. No. This is just the first sign that we don't know that this is failed or not until it tried and going higher. Who knows the next leg it go down, the next candle, the next candle, the next candle. It's continuously going and it took this high. Can you see this high? It took this high. So when it took this high, now you can say that this leg down is failed to make a new lower low. So rather it make a new high. Now this is the market structure shift. Now these sellers, we can say maybe they diminished or dried up. And during this whole period, if you notice that the 50 was below the 21 was below the 50. So what is this? This is the shorter term bearish. And once the 21 is above the 50, can you see that? Here it turned bearish. Here it turned bullish. Market structure shift turned bullish. The first pullback into the moving averages. Now if you buy from this breaker block, and now if you buy here, your stop loss is below the breaker block and even below the 50 moving average, and now you target the 4 hour 5 hour until here. Does it make sense to you more, or it makes more sense if you buy directly from here and your stop loss is here? Which makes more sense to you? So you ask this question from yourself first. If the answer is this one makes more sense, then these sellers you need to wait to diminish. Once they diminished and we got the market structure shift, or this market structure shift at the same point is a breaker block as well. Right? So it's the breaker block. Now if you buy from here, it makes more sense. Okay? Now I'm going to delete this one, and now you understand that this was a continuation trade. Why? Because we were the longer term bullish, and but this bullish, we want these sellers to diminish first. Once they are diminished, then we will buy. Okay, now let's see the second. I'm going to delete all drawings. Okay, let's go back on the 15-minute time frame again. So look here, the market made a new high, the market made a new high, the market made a new high, and this time the market unable to make a new high. Instead, it's making a new low. Can you see that? This one. This is the same thing on the opposite side. What I was showing you on the long side, now the same thing is happening on the sell side. So this is the market structure shift. Rather than to make a new high, this leg failed to make the new high. Instead, it made a new low. But are we interested to sell? No. Why? We need the confirmation entry. How we have the confirmation entry? We are going back to check the confirmation entry. First thing you check here. I'm going to draw a line here. What's happened here on this candle? Not only the market structure shift, but if you notice, okay, let me turn off the 8. If you notice, the 8 crossed the 21 on the sell side. So it turned what? Shorter term bearish. What is the shorter term bearish? 21 is less than 50 and 50 is greater than 200. Yes or no? Check your screenshot. Isn't it the shorter term bearish? If it turned the shorter term bearish, now we can expect that. Why? Because now this unable to make a new high, it got the market structure shift. Point number 1, step by step. Number 1, unable to make new high. Step number 2, it got the market structure shift. Number 3, it triggered the short term bearish. So see how many things are aligning on our side to think about it that maybe we are going short now, at least the short term short, because short term bearish. I'm not saying longer term because this is shorter term. 2150 is still above the 200, 50 here still above the 200, and here also still above the 200. So we are still in shorter term bearish, but shorter term bearish, and based on these three logics we are looking for the shorter term bearish entries. Okay, and now we got the market structure shift, and this is the first pullback. Same like I said before, this was the pullback. Are we interested to buy here? No, we need to diminish these guys. Yes or no? Similarly, after market structure shift, we got the buyers. Are we interested to sell into the buyers? No, we need to diminish these buyers first. So every time the opposite party, for example, you are looking for sell, you need to dry up or diminish the buyers first. Or conversely, you are looking for buy, you need to diminish the sellers first. You need to diminish the opposite party. Please don't try to say that this is the best price I can take and my stop loss is just above this one, and for sell this is the best price. Best price is not always the good price. Okay, sometimes the best price you take, it will get more and more best, and ultimately it take your stop loss. Why? Because you are selling against the buyers and they are still buying. How come you know that these buyers are done or not? You need to wait for them to they are done. You are going to make money in this stock market against the machines, against the algorithm. Don't try to you can say that challenge them. Don't challenge uh, the algorithm that okay they are buying, I will sell. You are not going to win against the algorithm. Remember my words. If you think you are more smart, you try, but ultimately after 2 3 years when you will lose a lot of money, then you will come back into my system. I assure you that what I'm teaching you is based on my 2 decades of experience. Okay, you have to follow this. Otherwise, you can choose your own system, but ultimately you will come back. So these are the buyers. How come you can sell against these buyers? You know that these buyers how they are on the 3 minute time frame. Let's go. Look here. These are the buyers. These are the buyers. Okay, how you can sell against, you see, against these buyers, even against these buyers, how would you sell? You cannot sell. You need to do the same thing again. What? You need to wait. This is the market makes a new high, a low. Market makes a new high, it comes down. And rather than to make a new high, it make a new low. So if it made a new low, this is what? The market structure shift. Now you can say that these buyers most likely they are diminished here. Okay, and now you got the pullback again, and I'm not going to take you further lower, but honestly these are also again buyers after the market structure shift into the moving averages here. And you can go one time frame further lower and you can diminish these buyers and then you can sell somewhere here. But I don't recommend you to go more and more and more lower. You know, you can go to the lowest time frame to find the last buyer, the last, absolute last buyer to diminish. And when that time you will sell, that is your timing. But that is too much precision. I don't recommend this one because it will take you too much deep into the deep hole, and maybe you will get confused that maybe any buyers left, maybe not, maybe yes, maybe no. Don't go too much. What I'm teaching you here, I think what I'm doing, I'm teaching you that one. I sometimes I go even the most lowest time frames to diminish all buyers if I want to sell. But then when I do this, then I increase my size. Rather than to 10% of my portfolio, maybe I do the 15% of my portfolio position. But not of course 50% of my portfolio. But that conviction comes with the experience. Okay. Now actually these are also buyers, but I don't recommend you to diminish these buyers also. Now you see that market structure shift, from this you can sell. Now you are again selling against the buyers. Okay, on this time frame you can go one time frame further lower, wait for the market structure shift. It means you diminished everything. Okay, but let's say you sell here and now your stop loss is, let's say, above this one, and it's a 5.5 hour trade. Did you see that? And based on the moving averages, let's talk about the moving averages. Look here, this was the bullish. Can you see that? On the 15-minute time frame, it's shorter term bearish. Yes or no? It triggered here. Shorter term bearish, right? Now if we are shorter term bearish and based on that three things, market unable to make the new high, market structure shift, and shorter term bearish, these three things are on our side on 15-minute. Okay, on the 3-minute time frame, what is this? 50 crossed below the 200 and 21 is below the 50. It's longer term bearish. Can you see that? It's longer term bearish. We turned longer term bearish on the 3-minute time frame. So perfect. Now we are interested to sell, but the problem is now these buyers here, they took the price into shorter term bullish. What is the shorter term bullish? Check your notes. 21 is greater than 50 and 50 is less than 200. Yes or no? So 50 is less than 200 and 21 is crossing above the 50. So this thing turned into longer term bullish. I mean shorter term bullish. So if something is shorter term bullish, why you will sell, right? You will wait. So did you see that this market structure shift and the first pullback? Now you see that the 21 is crossing the 50 again, and now once the 21 is crossing below the 50, so 21 is less than 50 here. 21 is less than 50 and 50 is less than 200. You turned into again what? Check your notes. Long term bearish. Now based on this logic, you are again into longer term bearish, and then you see the move. Okay, so Now you understand. By now at this point, actually the video become too long. I have too much to speak. I can't speak everything in one video. But by now you at least understand one thing, that once you have the range, you want to play the continuation, or you want to sell. Okay, and even you see that this cell is above the DOB. You see that? But still I sold. Why? Because I explained my thought process based on the moving averages. But it doesn't mean that I will only use the moving averages and are not using the ranges. These ranges are telling me that they are switching from the longer term to the shorter term bearish or something. But in overall, we are still in the longer term bullish. This range is still bullish. Okay, but we are, rather than to continuation, now we are in the pullback into the, you can say that, EOB or something. Okay, until EOB, or until at least to the moving average, or this is the smart money trap order block, so it is rejecting here. But I explained these things so many times. You check everything in the videos. Today I explained to you that how to connect everything together with the moving averages. And I think this is the most important video. If you understand this video, I think 80% of job is done already in the market. Then is just the practice. Remaining 20% is still, there are some secrets I'm not going to say here, because you even don't know that where I'm exactly selling. But 100%, this is a 100% here is a sell, and 100% here is a buy. But since I'm the creator of this moving averages system, I'm the owner of this system, not these DOB EOBs, these moving averages. I'm the creator, how I use this system. So I know the nuts and bolts of this system, how exactly it works. So there are so many secrets I'm not going to explain right now. Uh, I don't know, maybe in future, but I don't know. But I told you almost 80% that can make you profitable if you write down everything what I spoke in this video. You don't need to buy the courses, and you don't need to find the wrong gurus. Now the last thing, if someone just want to disconnect the video is okay, but if someone want to continue, I want to show something here. This is like some of you guys know that I'm the uh, swing trader. Look here, I shorted master at 3, where is the price, 323.42. Look here, I go to the 15-minute time frame and the moving averages. Okay, this is my sell yesterday. Can you see that? The move. And this was my stop loss. See the trade? 7-hour trade. And if you go on the 3-minute time frame, it's the longer term bearish. I mean, look here on this one. I mean the shorter term bearish. It was coming back to the shorter term. Of course, the new people who are just learning the system, they will sell on this candle or maybe this candle. But since, like I said, I'm the creator of this system, so I know that how these all things they are working. Even I can sell here, but I still waited because I I'm not going to explain this area because this is too much advanced for someone. But still, I sold here because I expect that now we are going to shorter term bearish and then longer term bearish. And then you see that this is a 7-hour trade basically. 7-hour trade which I just showed you. Okay, and this is my one trade. And second trade I quickly show you. Look here, I said tomorrow's plan. Actually, this is yesterday before QQQ or Nasdaq it fell down. I said if it opens gap lower at 533, I will short the market and SL above today's high. Okay, and it opens a little bit rather than gap lower. It opened a little bit gap higher, but of course it didn't change the overall moving averages structure. I never know that the market will open gap lower or higher. I said if it opens gap lower, I will sell at 534 if gap's lower. But it opened a little bit gap higher, but then it came to the 534. Who knows, it will open gap lower or higher, but it opened here. And of course, you see that what is the shorter term? What is this? From here, this was the shorter term bearish. Why? Because 21 is below the 50 and but 50 is above the 200. Check your notes. This is a shorter term bearish. And these are the buyers. Do you think that I would love to sell against these buyers? No. Even this is yesterday when the market opened here. So do you think that I will sell or buy something from there against these buyers? Of course not. I will wait. And what happened? We got the market structure shift and I entered at 534 rather than there. Actually, I entered here. Can you see that? Here. I entered on this candle and stop loss just above the 50. And this is a 3-hour trade. Can you see that? This is a quick. So 7-hour in master and 3-hour in QQQ. And actually I have 2 other trades in Meta, and I shorted Meta. You see that? I'm not going to show you where I shorted on Meta on 15 minutes. You can go and check. And I shorted Hood. See? And also I gave the call here about the Meta and Hood. I need to check that where was that call. But anyways, that is not important for you where I gave the call. These were 2 immediate, so I showed you. So what the point is, I'm following this system on everywhere and on every instrument, and it works for me. So why would on the earth I will look for the other system and other gurus to teach me something and I can make money? I can make money, very good money in this market because I follow my system and I'm teaching you free. If still you cannot learn something free, then you go and pay money with the fake gurus, and after 2 years when you learn nothing, then you come back and check my free content. Okay, then you will make money with my free content. I'm not charging anything because I can make money. Okay, so practice this system as much as you can. And if you have any question, you write down in the question section. But I will answer when I will be available, because I have so many things to do. Most of the time I'm not available because I'm busy with my trading. But when I'm free, then you see that today almost 1 hour video, more than 1 hour video I created for you guys. This is all what I can do for you, and free. Okay, thank you.